JBlog, 20th of June 2010. Starting out by looking at the 2-day chart of the S&P 500. Now, Friday was option expiry Friday, and this is Friday. This is the most boring option expiry day I've ever seen. Usually, option expiry is very volatile because people trade in and out at the last moment. But it was pretty flat, so nothing much happened. Now the last week was pretty exciting, not very good for bears. Famous last words is all I can say, because obviously the market has once again gone up. The bulls have once again pushed this market way up. One thing that I find funny, personally, as a personal observation here, is how everyone was wringing their hands about how oversold this market is and how it has to turn around. And it did turn around, but I mean, on what metric do these people call this market as being oversold? I mean, if I'm looking at the stochastics here, it's not oversold here. It's not oversold there. It barely dropped below 25. Yet when when the stochastic goes to like 95, 98, 99 up top, nobody talks about, oh, the market is so overbought, it has to go down. Here, we have a huge length of being completely overbought, and the market kept going up. So how this overbought and oversold thing is just very puzzling to me. How, I mean, let's look at this market for the last year and how um, insecure the bulls really are, because we have this amazing run up that doesn't even do it justice. We have to look at a 2-year chart here. We have this amazing run up here from 65 on the SPY all the way up to 120, and then market drops to 105 and it's suddenly oversold. Well, then what do you call this? This is like majorly overbought. So this is the way it ought to be, and this here is a disaster. That's just, anyways, bears. Strange people. There was a question in the comments on what packages I use for charting. This particular one is actually it's built into the thinkorswim platform, and this is profit charts. I use that for live charting. It's very easy in this one here to draw a line, to draw a trend line, and to see things move. The other thing I use is stock charts. Stock charts, you can look at stockcharts.com and you can take out an account. I've got an account, of course. It's more for static charts. It's nice for printing, and it's nice for it's got a very nice layout. I like this layout best. Here we're looking at oil. Oil has made a new high. That might be partially because, of course, it is hurricane season is coming up. Here's our first tropical depression that is currently passing over the the Gulf, and that, of course, could, I mean, not this particular one because just tropical depression, but the forecasters said that this might be an above average hurricane season, so platforms in the Gulf could be hit, and we already know what happens when platforms get hit. TED spread has taken a little bit of a downturn, still very, very high, very elevated. Has dropped down from 48 down to 44, 43.87 on Friday, so banks are a little less in panic mode. I wouldn't breathe quite yet, but I mean, they do whatever they want to do. News that China has finally agreed to bring up the value of their currency. That's of course a disaster because now the world imports most of their stuff from China. That will make everything much more expensive for the consumer. and take more money out of the consumer's pocket, and the consumer certainly doesn't have any money in their pocket to spare. So that will hit us contrary to what the American lawmakers think it will do. Um, Friday, we had a report. I think this was Friday. We had a report that the Philadelphia factory index slumped. So the recovery that everybody's talking about that is running so smoothly is not running smoothly everywhere. It is certainly running more smoothly in certain places of the country, probably those that are well connected politically and get their hands on that $1.5 trillion that the taxpayers being burdened with right now to keep this recovery going. Um, that is an enormous amount of money. It will have to be paid back at one point, and even if it doesn't have to be paid back, you have to pay interest on it, and that is just going to take more money out of the future. Current gain and futures pain. Freddie Fannie, of course, is now at what 160 billion. Worst case scenario 1 trillion. Actually, I've heard 1.5 trillion, 2 trillion perhaps is more likely the actual damage once the next wave of foreclosures hits the market. So that's going to be money that needs to be borrowed. That's not even on the balance sheet yet. And that is money that interest needs to be paid on. Builders are rushing to finish houses because they need to have these houses sold before this tax credit expires. They're not really building any new houses beyond that. They're concentrating on finishing what they have currently going, taking that cash. They certainly do not see the future to be very particularly bright. Um, Canada and the entire northwestern United States, western Canada has had very wet weather. And plantings, wheat plantings, are down to the lowest level since 1971, which is very low. Also, Australia is having a locust plague that could potentially hit that crop quite severely. Europe's weather has been quite cold, so I am guessing if any of you trade commodities, there'll probably be an increase in food prices coming up in the future, which should then take even more money out of the consumer's pocket. So, and here's a wonderful one I came across. It's a misleading headline. Global demand for U.S. assets rises more than forecast. And when you actually read into it, then you find out that the purchase actually went down from the month before that, but it exceeded the forecast. So how that can be considered an increase in demand? No, it's not an increase in demand. That's a drop in demand, but it has exceeded the forecast. So just another one of those stories where Wall Street, the owners of all of these news services, is definitely modifying the information. They're not lying, but they're definitely misleading, no doubt about it. So what happened this week? Nothing much really. I mean, we had one fantastic day, and outside of that, pretty well flat. Not much. One thing that is interesting that's coming up here is uranium. Um, I've been investing in uranium for quite a while. Uranium then hit a low and kept going lower and lower. Uranium looks almost like it could establish a bottom here. And the supply demand statistics on uranium look fantastic. Start looking into uranium because in the next 2-3 years there will be a lot of money to be made in uranium. That's all I have for you today. Good luck, make lots of money, and all the best. Bye.